All right, guys, welcome again back to my YouTube channel. So, this is actually a correction of the video I actually made yesterday. Like, I'm using this medium to actually, recreate exactly what I was talking about. And I also said in that video that was already blocked, I said it there that for people that were on it, they know what I said there. So I said that we're not able to complete yesterday's webinar because of time. So I said that I am going to complete it. I'm going to create another video like this, complete it. Knowing for me that I'm going to actually create a whole video to just complement with it. So don't mind me if I'm a bit rusty today, because today is actually Sunday and I just came back from church, and I will make sure that this video goes live today. So I also have to do some little editings and stuff. So with no further ado, let's quickly go into what we have for today. So today is actually day 2 of not really day 2, because yesterday is supposed to be day 2, but let's take this video as day 2 of understanding the basics of Forex. So with no further ado, let's quickly go into what we have for today. So let's see. So this is understanding the basics of Forex. And as you guys know, this is day 2. You guys can follow me on all my social media platform, which is Twitter, which is Victor_USAN, then Facebook, Victor Olaniyan, then Instagram. This particular Instagram has actually been disabled, and I already made this presentation even before the disability of my Instagram, if that is an English that goes with Instagram. So, and I already created another Instagram account a few days ago. So the link of my new Instagram is in the description below, and my username is Vic.USAN. So it's really no difference to the initial Victor_USAN. So my name is a bit rusty, and I just want to give as much information as possible. And trust me, this particular video is gonna be a little bit lengthy, because I will be emphasizing on a lot of things. You get what I'm saying, guys? I'll be emphasizing on a lot of things. So let's quickly go into what we have for today. Let's see. So a quick recap of day 1, a quick recap of what I actually did on the first day. So we'll talk about the first day. We'll talk about what is Forex. We'll talk about market participants in the Forex market. So, and we'll also talk about, why exactly people trade Forex. Let me just quickly do a brief you know, take on it. So we said Forex is an abbreviation for foreign exchange. They take the for from Forex, from foreign, and the X is from exchange. So like foreign exchange is Forex is the combination of foreign exchange. So like it's just a short form of it. So, and we'll talk about the history of Forex in my first video. You can go back to it. We'll talk about the barter system. We'll talk about the gold standard. We'll talk about the free floating standard. I'll talk about the online Forex trading that we do right now. I also talk about the market participants. I'm just doing a quick recap of what I actually talk about there. So you guys can actually go back to the video. I think I'll put the video link in the description below. So you guys can go back to the video to actually do what to watch it and see what I actually put more emphasis on. So let's quickly go into what we have for today, because I don't want to make this video way too lengthy. And if you guys don't know me, if you are a new viewer, of course, my name is Victor Olaniyan. You can see it in my YouTube name. My name is Victor Olaniyan, and I've been trading Forex for almost 2 years now. Let's say a year and let's say 11 months. I think it's gonna be 2 years next month. So bear with me, because this is going to be my own view of what I see the basics of Forex on. And of course, I'll be leaving some more resources, some more reference where you guys can go to and educate more yourself. I don't know if you guys understand exactly what I'm saying. So with no further ado, and again, if you're a new viewer, please do well to subscribe, like, and comment exactly the key points you understand most in this particular session. And if you have any questions for me, of course, put it down in the comments. I'll be talking more on it probably on my socials or the next video. So let's quickly go into our for today. Let's quickly see what one. So what you guys will actually learn today, or number 1 is understanding currency pairs. Number 2, bid, ask, and spread. Number 3, how Forex prices move. So like I'm just going to be I intentionally made this a kind of a series so that I'll be able to break the information down into simpler things. So that I will not just compound on the information in your head at once and you guys just go. You guys, many people don't understand things at once. You go what I'm saying? People don't understand things at once, but once you break it down step by step by step by step, they'll be able to assimilate it together. They'll be able to compound the amount of information you're giving to them. So let's quickly go into what we have for today. We already talked about what you guys will learn, which is understanding currency pairs. Number two, bid, ask, and spread. And number three, how forex prices move. So what I want you guys to do is take your pen, take your jotter, and take a bottle of water, because this is gonna be maybe not the most important video, but this is going to be one of the most important video. And I want you guys to take this as serious as possible. You know what I'm saying? I want you guys to take this as serious as possible. So let's quickly go into where to have for today, so I will not waste too much of your time. So number one, which is understanding currency pair. So exactly what is a currency pair? What is a currency pair? So I'm going to be breaking it down into what is a currency and what exactly is a pair. You know what I'm saying? This is like I feel like this should be something that I feel like this should be something that I wish to say when I first had the idea of going into forex, because I actually wasted a whole lot of time doing jargons, following who I'm not supposed to follow, following more than one mentors. Like, it is something that if I saw me now to teach me then, it is something I can easily just grasp. Do you get what I'm saying? So like, I want you guys to take this with all seriousness, and as time goes on, of course, we'll to be very, very interactive. Though this one can be interactive, but you can leave the questions you have in the comment section. You get what I'm saying? So as I was saying, what is a currency pair? So what exactly is a currency pair? So firstly, a currency is a money. A currency is the money used in a country for buying and selling of goods and services. So I actually expect everybody to actually understand exactly what currency is all about. You get what I'm saying? So like, I don't think there's any country on earth, any country all over the world that doesn't have a currency. There is none. There is none. Maybe I've not seen it. Maybe I've not done my own research yet, right? But I feel like there is no country on earth that does not have a currency. As long as you have a country with people and government, you will definitely do what? You definitely have a currency. 2 minutes, guys. So, for example, of currencies I'm talking about: the United States dollar, the Nigerian naira, the pound, Great Britain pound, and of course the Indian rupee. So like, there are other kind of currencies: Japanese yen, you have the Ghana cedis, you have so many kind of currencies. But I just pick the ones that are quite common and the ones that majority of people know about. Do you get what I'm saying? So since you know the meaning of currency, so now let's go into what a currency pair is. Or let me explain what a pair is, right? So a pair is, you definitely know when something is a pair. You know what I'm saying? Like, a pair of glasses, a pair of slippers. Slippers, there are two different legs, right? So like, these left slippers, right slippers. So when they join together, they are a pair. You know what I'm saying? So like, pair is, you can call a pair two or more things, two or more things that join together are pairing together. So let's quickly go into what we have for today. I don't want to divert too much because we don't have too much time, and there are still so many things I still want to cover and speak on. So we'll talk about currency pair. We'll talk about currency, and I just explain exactly what a pair is. Now, a currency pair is a combination of two currencies used in forex trading. Look, I will still emphasize on it. So since we know what a pair is, combination of two or more things, right? So now, a currency pair is a combination of two currencies used in forex trading. It's a combination of two currencies used in forex trading. Now let's go into it more. It's self-explanatory. You know what I'm saying? I'm not here to start breaking things down as if I'm talking to a kindergarten. You get what I'm saying? I'm talking to people that are, that know what they are doing, to even open a YouTube, and for you to open, like, you are not an idiot. You get what I'm saying? I'm very sorry for using all those kind of words which YouTube does not recommend. But like, I know I'm speaking with people that can easily understand what I'm saying if I break it down to their level. Since I'm not speaking to kids, I know that it's very easy for me to communicate. You get what I'm saying? So now that we'll talk about currency pair, which is the combination of two currencies used in Forex. It shows how much of one currency is needed to buy one unit of the other. So like, now we're going to a more advanced part of things. So like, um a currency pair is just like, I'm sure you guys are familiar with the exchange rate of naira and dollar. So like, it takes 1,600 naira to buy $1. So like, it takes each. So a currency pair shows how much of one currency can buy the other. I don't know if you guys can understand exactly what I'm trying to say here. It shows how much of one currency can buy the other currency. So which is called a currency pair. So now let me quickly give more examples. So for example, in the euro USD currency pair. Now I want you guys to actually, I'm sure you guys, many of you have read the slides I just put on now. So I want you guys to actually listen to me attentively, and you will get over this together. Sorry. So we talk about euro USD. So euro and USD are pairing together. You get what I'm saying? So like, they are a pair, of which euro, which is the first one to come before, like, it's euro USD. So the first currency to join to the second currency, the first currency is called a base currency. You get what I'm saying? So the first currency is called a base currency, while the second currency is called a quote currency. The second currency is called what? It's called a quote currency. So euro USD. You go, I'm saying? So I'll still give more examples as time goes on. I'm sure you guys are going to understand exactly what I'm trying to say here. So now, euro is the base currency, USD is the quote currency. We'll talk about this. So now, if euro USD is equals to 1.10, it means 1 euro is equals to 1.1 USD. I don't know if you guys understand exactly what I'm trying to talk about here. I don't know if you guys understand exactly what I'm trying to talk about here. So let's say USD NGN. That is United States dollar and Nigerian naira. So USD is the base currency because it's the first currency to come, and Nigerian naira NGN is the quote currency. So if USD, which is the base currency, is $1, this one is 1,600 naira. I don't know if you guys understand exactly what I'm saying. I will still leave more reference and more links in the description so that you guys can go over some websites and some things that big traders have put together. So let's quickly continue. So we talk about euro being the base currency and USD being the quote currency. I'll still give more likely examples. So let's quickly go into more examples. So now, more examples. I talk about this USD NGN, so United States dollar versus Nigerian naira. So when you compare these two currencies, you realize that it takes 1,550 naira to buy $1. So which means that $1 is equals to 1,150. Sorry, 1,550. I'm very sorry about that. So more examples compound and go on and go on. Let's see another example. GBP USD. That is Great Britain pound for the GBP versus United States dollar for the USD. When you compare these two currencies, you realize that it takes $1.29 to buy £1. As the time I'm recording this, it is 1.29 per pound. $1.29 per pound. So compared to like it's just economic standard. I'm not here to start comparing two currencies and two countries together. So we talk about understanding currency pairs, which is the combination of two currencies involved in forex trading. So with this, I'm sure that you guys are able to see and I'll be able to give more examples. But I'll still leave more reference in the description below that you guys can reiterate on. And if you guys need these slides I put together, you guys can do well to message me on Telegram. I'll leave my Telegram username in the description below. I'll give it to you for free. I'll just if you just ask me that I'm from your YouTube and you told me, I will give it to you because I want you guys to understand every single thing I'm talking about. Put it in your head. So let's quickly continue. And so key takeaway, let me give you a key takeaway. So a key takeaway, any currency attached to the United States dollar is a major currency, but not all. Not all currency that is attached to the USD is a major currency. Now let me explain this. So major currencies are there are currencies that are stable, and there are currencies that are from currencies that are from countries with very, very strong economy. Let me use that. So if you compare the UK, which is the Great Britain pound currency, versus the United States dollar, that is a major pair. But if you also want to compare Nigerian naira and United States dollar, you know that the comparison is way farther than each other. Like the economy standard of Nigeria is nothing compared to the economy standard of the United States. So like it is, I call something a major pair when the currencies of each pair, the currencies of those pair come from countries with standard and strong economy. You can use the economy of China, you can use China currencies to compare with USD currency, but you can't use China's currency compared it to what Nigeria's currency. You go what I'm saying, guys. So let's quickly do more. Let's quickly do more. So now let's quickly go into number two, which is what are bid, ask, and spread. So I want you guys to actually give you guys a minute of reflection because I'm sure you guys have watched a few movies where they're talking about that kind of movie where give me a minute. You know that kind of movie where they'll be raising their planks up like that. You know that kind of is it that they're bidding like okay, look at something now. You come for an auction and in that program they are sorry. So in that program, they are trying to sell a particular kind of art, right? They're trying to sell maybe the art is a very old art, and they want to sell it for and the starting price, which the company that found it, the starting price is maybe like $1 million. But there are so many billionaires and big people there that they are lucky guys, but they are big people. So like, how do you what exactly am I driving towards, right? Bid is when two or more people try to compete for a price of a currency. Do you guys understand exactly what I'm saying? So you know that point where they're raising their plan up, number 15 said $2 million, number 16 says $6 million. So that is what you call a bid. So bid is when you give me a minute. Bid is when you buy something, when you are trying to bid for the perfect price which you are going to buy something. Do you know what I'm saying? So let me quickly share my screen, right? Let me quickly share what I have on my screen right now. So I said what are bid, ask, and spread, right? So now let me share another part of my screen. So bid price bid price is the price at which a forex trader or broker is willing to buy a currency pair from a seller. So it's simply the ideology I just put together now. It's simply me just raising my plank up that I'm buying this thing for a higher price than this other guy is buying from this seller. So like it's something that you can actually put in life example. I see you should know what a bid is all about. If I'll still put more links in the description below, because I still don't understand a better way of putting it than the way I just put it down. So a bid is what is the price at which a forex trader or broker is willing to do what? Is willing to buy a currency pair from a seller. Is willing to buy a currency pair from what? From a seller. So now what is ask? Now from here henceforth, I may not be able to share my screen because of some certain issues that rose up with my system. So ask is the certain price. Ask price is the certain price at which a seller is ready to sell to a buyer. So like buy bid is buying, ask is selling. Bid is for buyers, ask is for sellers. Do you get what I'm saying? So ask price is a price at which a seller is willing to sell maybe a product or a service to a buyer. Do you get what I'm actually trying to say? Now, spread is the difference between a bid, which is the buying price, and a selling price. Now, this particular gap is not supposed to be more than 0.4, like 0.4, 0.6. If it's already maybe like 1, it's getting too much. Do you get exactly what I'm trying to say? So spread is the difference between bid and ask. And as time goes on, if you guys get into live markets, you guys are going to understand exactly what I'm trying to put together here. Though I'm going to leave more reference and resources in the description below, so you guys should actually look at what I'm actually putting down like in the description. So so with what we've talked about now, I would like to go into number 3, which is what? How forex prices move. Now, this one I should have actually done a slide for this, right? Because there's really no way I can explain this without putting things together. You get what I'm saying? So now, how do forex prices move? Now let me every single thing I'm trying to explain here, I'm trying to use basic ideology and basic examples. You get what I'm saying? I'm trying to use human applicational examples. You get what I'm saying? So how do you move? Like, how do you move from one place to another? You walk, right? You take steps by steps by step, or you can run or wherever. You shall take steps. You shall move your left leg forward and your right leg forward. So now, forex prices move the same way, though they move in pips. Their leg is pips. Instead of leg that should show up, they have pips. So, and a pip is the way and the movement of forex prices higher or lower. Do you get what I'm saying? So how I'm taking steps, I'm taking a pip after the other pip after the other pip after the other pip. You get what I'm saying? So like a pip is is defined as the way in which forex prices or currency prices move, currency pair prices move. You get what I'm saying? Now let's use the steps for example now. From when naira to dollar, dollar to naira was around 500, right? So in between 500 and 1000, naira dollar to naira got to 1000. I think for 500 it got to 700. So in between those places, before you get to that 1000, you can't just drop from 500 to 1000, right? So in between in between that gap is pips. You go, it's like say I should take, I'm already in the 5th step. You now say I should take 10 more steps, like 5 more steps to make it 10. So I'm going to take 5 more steps. So like that gap in between that 500 naira per dollar to 1000 naira per dollar is pips. And pips are calculated by by the second to the last digit of a currency. I'll still have to explain this in my next video. So, and if you want me to explain to you before then, you can do well to DM me on Telegram. Of course, I'll have to emphasize more. So so how do forex prices move? I'm answering this question that forex prices move through pips. You get what I'm saying? So through pips, forex prices move. And with no further ado, I've been able to teach you guys exactly what understanding currency pairs is all about, and bid, ask, and spread is all about, and exactly how forex prices move. So with no further ado, I would like to cut it the end of this particular video. And before I go, calm down. Before I go, I want to do a quick shout out to Willis Capital. They are not any paid promotion of any. They are not sponsoring any of my videos, but because they are the best prop firm in the world, and you guys can get your prop firm 10% off your prop firm, your prop account rather. Your prop account from Willis Capital Prop Firm, you are getting a 10% off. You know what 10% off is? You get a 100K account instead of you paying. I think instead of you paying 450 something, you pay 430 something. So you're getting a 10% off. So do well to actually, click the link in the description and use the affiliate code and also the discount code. Because without that discount code, you can't get a 10% off. So do well to use the affiliate code and the discount code in the description below. And of course, a shout out to my Telegram channel subscribers. And if you have not joined my Telegram channel subscribers, of course, I'll put a link. All the links of everything I'm talking about will be in the description below. And of course, I'll see you guys on Friday by 7 p.m. and peace out.